Welcome to The Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to The Weekly Option. This is episode 407 on December 27th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on the AdvisorShares Trust Pure U.S. Cannabis ETF, Sable Offshore Corporation, Carnival Cruise Lines, and the United States Natural Gas Fund ETF. And we discuss 4 new trades on SELLAS Life Sciences Group, Intuitive Machines, Rivian Automotive, and Hecla Mining. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC @theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for The Weekly Option. Now, the U.S. markets pushed higher once more this week, with both major indexes increasing more than 1% week over week. The Dow Jones Industrial Average grew 576 points, closing at 48,710 points on Friday. The S&P 500 index picked up 95 points, ending the week at 6,929 points. And now it's time for the topic of the week. The topic of the week is expected returns. When you study finance, you learn about this concept called expected returns. The formula for the expected return tries to adjust the amount of money you could make on an investment by the probability or likelihood that that return will happen. For instance, I'm sure many of you bought a ticket for the Powerball when the winnings were $1.7 billion. The likelihood of winning is so small that when you multiply the probability times the total jackpot, it will inevitably be less than the $2 or $3 you paid for the ticket. As long as that math works, the lottery will continue to make money. If it ever changed, they'd have to offer a smaller pot so that it would work. Now, on the show, I talk about risk management quite a bit. If you want to be a good trader, you have to understand risk so that you can align your actions with the risk you are entering when you place a trade. Now, to land this plane on expected returns and help you guys understand where I'm going, let's consider the new year. If you don't already have a list, why don't you write down 3 or so goals for the new year? Then, right next to your goal, assign a probability of it actually happening. Maybe it's 50%, maybe it's 25%, or maybe it's like 90% or higher. Be honest with yourself in this part. So now you should have a handful of goals for next year on a sheet of paper, and the probability of achieving that goal represented by a number between 0 and 100%. Now, for anything less than 75%, figure out a way to improve the odds of you actually achieving that goal. And for anything that is 100% or more than 90% even, I would suggest expanding your goal. If it's guaranteed to happen, it won't require any growth from you to achieve it. You might be sandbagging your number, as I mentioned a few weeks ago. Now, I've actually started doing this for myself already, and it makes me look forward to 2026 even more. When you're honest about the likelihood of achieving the result, you can start addressing the obstacles that might get in the way and keep you from achieving your dreams. That's why it's important to assign a probability so that you can, and then looking at it and deciding if it's less than 75%, that you can start addressing the obstacles. I want you guys to hit your goals, whether that's a goal in trading or if it's just a goal in any other aspect of your life. It all will affect your happiness and your well-being in 2026. So do yourself a favor, put a probability next to your goals, and anything that isn't quite looking probable, like if you say, oh, it's 50-50, do something about it. Join a group, get some coaching, do whatever it takes to remove any obstacle that's going to keep you from reaching your goal next year. All right, so that's it for the topic of the week. Let's go ahead and dive into the review of last week's trades. We're going to start off with a covered call on the AdvisorShares Trust Pure U.S. Cannabis ETF, symbol M as in Mike, S as in Sierra, O as in Oscar, S as in Sierra. At the time, the stock was trading for $4.93 per share. I looked at buying that stock and selling the January 5 call at 56 cents, hoping for a 12.78% return in 4 weeks. Now, shares of MSOS lost 13 cents, closing at $4.80 per share on Friday. The option that we sold lost 17 cents, leaving us with a net gain on the week of 4 cents. Now, we obviously would like to see the stock head higher in the next few weeks, but the amount of money that we lost per share in the stock this week was more than offset by the gain from the option. Remember, since we sold the option, when the price of the option decreases, we can buy it back for less money, allowing us to capture a profit there. Now, the price per share is still well above the break-even point, so no adjustments are needed at this moment. Keep an eye on the stock price going forward and make sure that you have a plan ready just in case the stock moves a little bit lower or makes a move that requires an adjustment. So no need to make an adjustment at this point. All is well. Next up, we have that cash secured put. I looked at Sable Offshore Corporation, symbol S as in Sierra, O as in Oscar, C as in Charlie. At the time, the stock was trading for $7.77 per share. I looked at selling the January 7.5 put at $1.30, hoping for a return of 17.33% in 4 weeks. Well, shares of Sable Offshore rose 75 cents, ending the week at $8.52 per share. The put option we sold lost 5 cents on the week. Now, with the stock going higher, we're feeling pretty good about the possibility of keeping the full premium that we collected on this trade when we sold the put. The stock price is more than $1 above the strike on the put that we sold, and we're $2.30 above our break-even point on this trade. So all of that is to say that the trade is working out as planned. No adjustments are needed on this one either. Now, we also had a credit spread on Carnival Cruise Lines, symbol C as in Charlie, C as in Charlie, L as in Lima. At the time, the stock was trading for $31.11 per share. I looked at selling the January 30 put spread at 33 cents. That could give us a maximum possible loss of 67 cents per spread. Well, shares of Carnival Cruise Lines lost 42 cents, ending the week at $30.69 per share. The out-of-the-money put spread that we sold is now at the money. The stock price is right between the strikes of our spread. So the stock price is 2 cents above our break-even price, which is really too close for comfort. We don't need to make an adjustment on this just yet, but we are close. And if I were to make an adjustment, it would probably be to sell a call spread and turn this trade into an iron condor. We could sell the January 33 call spread at 18 cents, which would fully offset the loss on the week. However, as I look at the daily stock chart, I like that the moving averages crossed recently, hopefully signifying more support for a price increase in the coming weeks. So I'm planning to be a little patient with this one, patient a little bit longer, just to see if the price does decide to head higher again before I decide to sell that call spread. I'm not making an adjustment yet, but I'm ready. The worst part is when you make an adjustment on a trade and then the stock actually it makes the move that you expected, and you end up losing money on the adjustment rather than the actual trade itself. So that's why I've learned to be a little more patient in letting the stock breathe. All right, finally from last week, we had a debit spread on the United States Natural Gas Fund ETF, symbol U as in uniform, N as in November, G as in golf. At the time, the stock was trading for $12.19 per share. I looked at buying the January 11-12 call spread for 65 cents. That could give us a maximum gain of 35 cents, or that's a 53.85% return in 4 weeks. Shares of UNG grew 61 cents, ending the week at $12.80 per share. The in-the-money call spread that we bought is even deeper in the money. The stock price is more than $1 above our break-even price, so there's no need to make any adjustments at this point. This trade is working out just as we planned. It's great to start out positively, right? But we still have 3 more weeks left until expiration, and the stock price can do anything during that time. So that's why it's important to stay ready with plans for making an adjustment as needed. So that's it for the review of last week's trades. Once again, this week we will be using the January 16th expiration date for all monthly options in the month of January. And each of these trades are going to use that expiration date. Let's get right into it. We're going to start off with our covered call. I'm looking at SELLAS Life Sciences Group, symbol S as in Sierra, L as in Lima, S as in Sierra. The stock ended the week at $2.86 per share. I'm looking at buying stock and selling the January 3 call at 35 cents, hoping for a return of 17.13% in 3 weeks. And you enter this trade by buying stock for $2.86 per share and selling the January 3 call at 35 cents. This trade makes the most money if stock prices finish above $3 per share. The break-even price is $2.51 per share. In real terms, that stock purchase will require $286 and you'll collect $35 for selling the option. Next up, we have our cash secured put. I'm looking at Intuitive Machines, Inc., symbol L as in Lima, U as in Uniform, N as in November, R as in Romeo. The stock closed on Friday at $15.24 per share. I'm looking at selling the January 15 put at $1.20. That could give me a return of 8% in 3 weeks. Now you enter this trade by selling the January 15 put at $1.20. This trade makes the most money if stock prices finish above $15 per share. The break-even price on this trade is $13.80 per share. In real terms, you'll collect $120 for selling the put option, and you'll have $1,524 locked up just in case you have to purchase the stock. Next, we have a credit spread on Rivian Automotive, symbol R as in Romeo, I as in India, V as in Victor, N as in November. Stock ended the week at $20.90 per share. I'm looking at selling the January 20 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Now you enter this trade by selling the January 20.5 put at 97 cents and concurrently buying the January 20 put for 80 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $20.50 per share. The break-even price on this trade is $20.33 per share. In real terms, you'll receive $17 per spread that you sell and have $33 at risk. And our final trade on the week is going to be a debit spread on Hecla Mining Corporation, symbol H as in Hotel, L as in Lima. Stock ended the week at $20.20 per share. I'm looking at buying the January 20 call spread for 33 cents. That could give us a maximum gain of 17 cents, or that's a 51.52% return in 3 weeks. Now you enter this trade by buying the January 19 half call for $1.87 and concurrently selling the January 20 call at $1.54. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices finish above $20 per share at expiration. The break-even price on this trade is $19.83 per share. In real terms, you'll pay $33 to enter the spread, and your maximum gain is $17 per spread. So that's it for this week's show. Thank you guys so much for listening. Hey, I hope you are enjoying the holidays so far. Hopefully you've had a happy Hanukkah, a Merry Christmas, and any other celebrations that you are partaking of to celebrate the season. Enjoy the family time and time with friends. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.